Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein with your financial market wrap-up, and this is for Wednesday, the 24th of October, 2018. We're about 3:20 p.m. Central Daylight Time, which means we've suspended trading until 3:30 in the stock index futures, and I wanted you to see how much they're down. I'm not convinced today was all about earnings or lack of earnings or anything with trade wars. It's terrorist attacks. And a number of bombs, that's all that we know. We don't know if they're actually activated type bombs or not, were sent out, be it the Obamas, the Clintons. They made it to Maxine Waters, I understand it, Debbie Wasserman Schultz it made to, John Bonner it made to. Now, we thought Governor Cuomo of New York had gotten one, but now they're saying he didn't. So I don't know what's true there. But if you got them today, I wonder if you're going to get more tomorrow. But we're hearing they didn't go through the mail, even though that's how the package looks. Supposedly they were hand-delivered. I don't know what's real. What we know is this is now under 2 weeks before midterms. All of those bombs were sent out, by the way, to Democratic people, not Republicans so far, which is interesting. As you take a look, now the question is how deep this break, because you've given back in many markets the whole year's gains. You know, we were wondering if this year was going to be a strong earner for the year, and now the question is it going to be a loser for the year? And even I was on today with Teddy from on the floor of the New York Stock Exchange. I was on with Liz Clayman on Fox. Their company backed out of a number of markets. I don't think that that's the wisest thing, but what do I know? But you get to the point where enough's enough, and I understand that. Now, as we take a look here at the S&P 500 index, if you take a look right through here, I've marked for you the closing price. And this is on a closing basis only, and as you can see, you're slightly under where you ended on December 29, 2017, and admittedly, these are futures markets, not the cash market. As we come to the December S&P, look at how this market has gone from 2940 and lost roughly nearly 300 handles in this market. Rather amazing. It started off as a correction. We thought it would consolidate. In fact, I thought yesterday was one of those days that we'd get a better consolidation. I think that was thrown to the wind when these terrorist attacks took place. Television all over the country, they broke in. We saw this on national TV. It was breaking in everywhere. I was on the floor, by the way, doing my show, and normally I talk more, and all of a sudden I heard behind me, I never heard the speakers there, and I didn't realize they were doing a practice drill, and I thought that was the real thing. In the S&P 500 index, look at the swing line, lower highs, lower lows. From the last rally high, you're 170 points away from that already. You're well under the 200-day moving average. The 18, you had a bearish crossover. We can come back here to see when this crossover happened. This was yesterday. This is today. So now you've got the 18 under the 100. That's called a bearish crossover where I went to school. It often leads to lower prices. I don't know if that all was made up today with this, with the terrorism attack, but it's there in the marketplace. Can you imagine if one of these bombs goes off overnight? That would probably create another issue. As you look at the Bollinger Bands, you're riding the lower Bollinger Band. You went to it yesterday, bounced away late in the day, a powerful rally. Today it was the flip-flop. You never even tried the rally today, and then you just kept cratering. And at the end of the day, we just saw massive sell orders come in and this market accelerate to the downside. So when you get to the slow stochastic, you're oversold. In this line right here, that's the closing of the futures on December 29th. That should be 2017. I typed that wrong. I did it just before I came on. So I apologize for that. If I did it on the other ones, I'll correct them as we talk about it. But you're lower, as you can see. When we come to the close, here I did it right, except the year's 1017. I was hurrying as I did this. I apologize. You're far away from it in the Nasdaq. So as much as the microchip stocks and everything are getting hit, this market's still, in terms of relative strength, stronger than we still are in the S&P. When we come to the Dow, you're weaker. The industrials are now under the low of December 29, 2017. Yay for me, I got one right. Lower highs, lower lows. And believe me, I was rushing. I wanted to get this done before we reopen so you'd be able to see today's settlement price in there instead of waiting for 4 o'clock. And as you can see, I did it again right in the Russell, and you're well under that as well with an embedded reading. This market, just all of them, they've given up. What I'm saying is, other than the Nasdaq, the whole year of gains, and they're negative in terms of the futures contracts from where they were December 29, 2017. The VIX coming up, but it is not going through that old high. I will look for that. If it doesn't get through that high, it is a sign that the market has overdone it, that the fear gauge, as we call it, is being stopped by the upper Bollinger Band. And if it turns down sharp from here, we know that you had lack of a top to challenge the previous top. In the bonds, well, you would expect that you get safe haven buying, and you're getting it. Higher lows, higher highs, momentum up, the bias up. Does the market have enough strength to get to the upper Bollinger Band? I would think it would if a bomb goes off, and I think it doesn't if one doesn't go off. Is that fair enough? That's not a trade recommendation, just ideas that go there. You know, the bomb going off would be like the Boston Marathon. It would be another bad thing to take place. Catching these things just shows how good Secret Service and other people are, and if you get one of these packages, you know to stay away. 10-year notes right up to the upper Bollinger Band on the fear today, and the market stalled against that. So you've got another rally there. TLT held up today. Not a dramatic gain, but still up nearly $1 on this. Nice move. You got the higher high, lower and low, so it's not a trend just yet. It keeps leaning against this 18-day average of closes. The dollar index got over its upper Bollinger Band. So if you throw out the day's events, you're up and over the upper Bollinger Band, overbought. Normally, this is where pros take money off the table. Did they, knowing this went on? Probably not today. Everybody's going to be looking all night long to see does anything else happen. The other shoe, we don't know. Lower highs, lower lows on the euro. This has nothing to do with us other than the strength in the dollar. I still believe this is the Italian situation. This is a slowdown that we're seeing in Germany in their goods and what's going on there. We're getting a general malaise going on, be it Asia, be it Europe. This is not good. This is not what the president wanted. In the British pound, you were down today pretty good, as you can see, down a full penny, and this is the market wondering, can Miss May hold on? She had her meeting today. It's called a 1922 meeting. And I hear that there was a lot of banging, and that's what the British do. They bang on their desks when they like something or dislike something. In this case, I heard they liked what she was saying, so that sounded good. But the problem is, there's no daylight here, and that is the problem. One of the things I was warning my traders, so you'll know, I said, you can get in real trouble trading the pound right now because every day's another piece of news that you can't prepare yourself for and the chart isn't prepared for. In the end, safe haven buying today, which you'd expect. Not a trending market, flat momentum, just staying over the 18-day average temporarily. If you were to take out today's high, not up to this 89.68 and turn down, this market could actually throw out sell signals. I've moved to the November Bitcoin. Why not? The October goes off the board in 2 days or so. So let's go here. The market got back to the 18-day average of closes, but I would be watching stochastics. You have absolutely no edge here in terms of momentum. The ranges have gotten very, very narrow. If you're looking at them, they're about $100 a day. You do remember this was the norm when the market would go from high to low. I remember when it was thousands of dollars a day. It's gotten much, much tamer. Is that lack of interest, or is that a market that's getting mature? I'll let you figure that one out. I don't know. In the Brent versus WTI crude, coming down. Now, I'm noticing also, as a fundamental part, that Europe is so desperately trying to do something for Iran to hang in there. They're trying to figure out a barter system of all things so they can get in Iranian oil and not use banking that touches the American system, because they know President Trump will knock on them real bad. Won't be words. It'll be fines. It'll be a real problem. How do you do that? I can't answer it. They're trying to get creative, but who knows if you can, and who knows that it'll pass U.S. muster. In any case, the market is narrowing in that spread. It's gone from 1058 to 917, and along the way, as world stock markets are breaking, that is not the environment where you're saying, gee, we need more oil, or when you're seeing that these big industrials in the U.S. are putting out negative forward guidance. That, too, is weighing on the market. We know that we're just days. Now we're days away from the lack of Iranian oil. Back here, the market was running on that news. This just shows you how psychology changes on you, and that's what you're dealing with, a psychological change. There's certainly no more oil on the market. Yeah, the Saudis are saying that they're producing up to 11 million barrels a day immediately, but how much are you losing in the Iranian trade a day? We don't hear much about that. Lower lows, so the market is still very much in a downtrend in the gasoline. Would you believe you were just up pushing the 215 area? You're at 178. This is what scares people. And in the nat gas, the market tried to rally, failed against the 18-day average today. Momentum down, bias down, no trend as I view the market. If ever you're going to attend one of my webinars, you're going to have fun with tomorrow's, right? Look at all we've got going on. Why not join in, ask the questions, let's see what we all come up with. In order to get in, you were sent an invite. It'll be in your mailbox. If it's not there, not in your junk mail, you've got to get hold of my staff at 866-973-2077. For those of you that signed up, read your invites again. Make absolutely sure you know the password to it. You need that. If you don't see it, call my staff. They'll get you into it. It starts at 1 p.m. Central Daylight Time. Bring anything you want with it. Ask the questions. I'll do my best to answer them. We should have a lot of fun, and what a time to hold one of these. I'm Ira Epstein. You have a good day. I'll see you tomorrow.